All righty. Well, thank you for the introductions, and thanks, Mike, for giving a little overview of what's going to be happening today. And definitely had a lot of good ideas whenever he was talking there. So I'll be talking a little bit about the banking institutions because, hey, budgeting all comes into play, and banks like as much as possible. So without further ado, just like to say hello to everyone and good afternoon. I'd like to welcome everyone to the Budgeting for Small Business webinar. I'd like to introduce myself again. I'm Raymond Tokar. I'm an external controller at Donnelly-Boland and Associates. I have been with Donnelly-Boland for over 7.5 years now, and I've worked on many different types of budgets. Again, there's all kinds of ranges, but again, I range from all the way down to about 100K up to about $15 million in a budget. So moving forward, I want to give an overview of what's going to be happening today. The things that I'm going to be talking about. First, I'm going to be just talking about what a budget is. And then second, we'll discuss benefits of budgeting. There's multiple reasons to create a budget for your business. And I could go on forever on that, but I'll talk about a few reasons there. Next, after that, we'll go through some key budget terms, just so we understand whenever we're going through the budget process. And then as well, from there, there will be the 4 main steps of creating a budget. And then after that, we can hop into some software, see some accounting software. I do have QuickBooks Online and desktop readily available. So depending on the mix and everyone and seeing what everyone has, I can go through either one of those. Maybe I can even go through both depending on the time that I have remaining. So let's hop into the next area. So again, what is a budget? A budget is a plan that outlines financial and operational goals for an organization. It helps track income and expenses for a set period of time in the future. Budgets can be made for a person, a business, government, or anything else really that makes and spends money. They are great to use, something that it's the perfect time to be having these webinars because, hey, 2022 is right around the corner, and this is perfect time to start budgeting for that 2022 calendar year, fiscal year, whatever you guys are looking at. So moving on to the benefits of budgeting. Budgeting is the most basic tool for managing your money. Most of the time, people think that budgeting is extra work and that you are no longer allowed to have fun and enjoy things because you're on a certain budget. You can't buy extra things, can't buy things for your employees because that's what the budget says. And that is definitely not true. What it does, it helps individuals and businesses organize their spending, track financial goals, and also identify where to spend, cut spending, or grow revenue. This will definitely help avoid unnecessary fees and expenses and keep you on track to those goals that you are setting. You have it set at the end of the year, ready for the next year, but again, it's never set in stone. You can always change things. Some more benefits to budgeting. Really, budgets also can help obtain funding to help grow businesses. Again, when talking to funding sources, especially banking institutions, like Mike said, they like to request budgeting to see where you believe your business is going and where it will end up in the near future. They keep the budgets, the financial statements on file, especially whenever you need a line of credit or you're just opening a business loan. They definitely like to see that. They love to see 2-3 year projections, especially if you're doing build outs on buildings and all that kind of stuff. See where your sources of revenue come from. Again, banking institutions like to know as much as you're ready to divulge to them. Now, on the other benefits of budgeting are that they prepare businesses for potential emergency spending and ensures that you do not overspend on certain expenses. Once a budget is created, it helps you set priorities and lets you prioritize saving and investing as well. It makes it much easier to discuss financial statements of the business to other people and helps owners and businesses make sound decisions in the upcoming years. So then that's really what I want to go through on the benefits of budgeting. So before I move on to the key terms, I do have a polling question. And here I'll launch it up for everyone. The first polling question, does your organization currently have an established budget for this year, or maybe you're in the process of creating it for next year? And just wanted to see what everyone's thoughts are and see where, if you need to learn more before creating it or where you're at in the year. I'll give you guys like 30 seconds, answer as much as we can, and then we will see. And then I will show the results, and then we can move into the budget terms. All right, let's close this out. I can share the results. And currently right now you can see about 29% of people have an established budget already, and about 71% do not right now. So, hey, as you're going through the budget process, hopefully you learn some items from what I am talking about today to help establish that budget.
Ray, is not having a budget like driving to the beach without a map? Would that be a fair analogy?
Yeah.
Going on that vacation, driving like 10 hours. I don't need a map. I'm just going to point my car, right?
Hey,
I know I'm going south.
Exactly. I have no clue where I'm going, but hopefully as long as it says south on the sign, I think I can make it there eventually.
We're just going to figure it out as we go, right?
Yep. All righty. So moving on. Now I'm going to move on to the key budget terms. I have about, I think, 5 terms that I would like to go through. The first one, and I would like to go through some terms that are very common. These terms will help you with setting up and implementing your budget into your business. The first term that I would like to discuss is fixed cost. A fixed cost is a cost that does not change with an increase or decrease in the amount of goods or services produced or sold. Fixed costs are expenses that have to be paid by a company independent of any specific business activities. Some examples of fixed costs, and you see some there, is rent, insurance, maybe administration salaries, interest expense, utilities. They fluctuate based off of the time of the year, but ultimately are a fixed cost and you have to pay them. And a good one is property taxes. All of these examples are expenses that remain constant for a period of time. And these are definitely the easiest items to predict and budget. Now, on the reverse side, there's other costs, and another cost that I want to talk about is variable costs. So variable costs are associated and fluctuate with an amount of goods or services produced. A company's variable costs increase and decrease based off of production volume. Great examples of some variable costs are some direct materials, production supplies, maybe some freight, commissions, direct labor. All of those just fluctuate based off of how much you're selling, how much you're going to be doing in your services or production services. So in the short term, there tend to be far fewer types of variable costs than fixed costs. And then these costs will change according to revenue streams. As revenues increase, most of the time, the variable costs should increase, and vice versa. If they decrease, your variable costs will decrease. Good example, seasonality, huge amount of sales in November, December, around Christmas time. And then in January, February, not too many sales going on, don't need as many seasonal staff, and that will reduce your expense there. The next term that I would like to talk about is a benchmark. A benchmark is a quantifiable performance level used to assess the extent to which a program objectives are being obtained. A great example of a benchmark would be used to compare processes in one retail store with those in another store in the same chain. Benchmarking is a great measuring tool to compare key business metrics and practices within a business area or against a competitor or other companies around the world. It helps to understand how the organization needs to change in order to improve its performance. Again, nothing's ever set in stone, ever changing. Obviously, we can tell from the last 2 years, everything has been changing significantly. And then the last two terms I would like to discuss are the two bases of accounting. There's a cash basis of accounting and accrual basis of accounting. The main difference between the two of timings, or the difference between the two bases, is the timing of when revenue and expenses are recognized. So to go into the cash basis accounting, cash basis is the method of accounting that records revenues only when they are actually received and expenditures only when cash is actually paid out. The cash method is more immediate recognition of revenue and expenses, as well as mostly used by small businesses, and maybe even whenever you're budgeting for your own personal purposes. Again, whenever it hits your bank, that's when you're recording it. The key advantage to cash basis is that it's very, very simple. The best way to describe this method is to follow, like I said, your bank statement. If you receive cash in on your bank statement, you're booking as revenue. If you're paying it out, you're not waiting for it to cash or pay it in advance or booking it in advance. It's really, okay, the check cash, that's when it's recorded. So the disadvantages of cash basis is that it could overstate cash balances of the company. If the company has large sums of accounts payable, they have bills just sitting there, but they haven't paid yet, and those bills exceed the current cash on the balance sheet, this could cause the readers, the owners, the board of directors really to believe the business is making a profit, but the company is actually losing money. Never a good sight to see, but that's the big difference between cash and accrual. So now going into accrual basis of accounting, this method is where the transactions are recognized when they occur. Revenues are recognized when earned and expenses are recognized when incurred. When cash is received is not the determining factor. Cash basis is definitely easier, but accrual accounting shows a more accurate picture of the company's financial health by including items, like I said, accounts payable and accounts receivable. The accrual basis of accounting is the most commonly used method, especially by larger companies, but again, mid-size, and depending on the type of business you are, who you're doing business with, source of revenue, a lot of them like accrual basis of accounting as well. The biggest disadvantage of accrual basis is that it does not track cash flow. It might not account for major cash shortages in the short term, but the company looking profitable in the long run. It just, as long as you should, now on an accrual basis of accounting, you have many different ways. Like I said, you have accounts payable, accounts receivable. You could always create a statement of cash flows that will get you down to your cash flow, like the cash basis. But again, there's just always an extra reporting factor whenever it comes to accrual basis accounting. And as well, another disadvantage is, again, it's more complicated to implement as well. It's just a lot of different things that you got to be booking bills, you got to be receiving, recording the revenue when it actually happens, the services. And then as well, then you got to track and make sure everything's happening on the back end, cashing the checks and receiving the actual deposits from those. So, all right, so those are all the budget terms that I wanted to discuss. And before moving on to actually creating a budget, I do have another poll question for you. So it's just, does your organization operate on a cash basis of accounting or an accrual basis of accounting? Just wanted to see what everyone's thoughts are. Again, maybe you're unsure, but hopefully maybe how I just explained the two budget terms, you might be able to make a decision. And as well, there's actually a fourth option on here, a hybrid method, where a lot of people do book a few bills in advance, but again, they're all washed out in the end for cash basis purposes. And as well, there might be some depreciation, those types of things that you can use on the hybrid method. So I'll give you guys a few more seconds, and then I will end the poll. We can see what's going on, and then move into creating a budget. All right, so it looks like 50% of us that are here are using a cash basis of accounting, and about everyone else, some people are unsure, hybrid or accrual. Everyone's about the same there. So definitely it's a question that you want to ask, and I will go into it more whenever creating the budget. All right, so moving on to the four main steps of creating a budget. Just wanted to give you an overview of the four main steps, and then I'll go into them in more detail. There is the preparation step of the process. This is the most time-consuming portion of creating a budget. The next step is the review and approval. This is where everyone will come together and agree on a final product for the business. Again, it could be as simple as one person up to as many people as you want to get involved with it. And again, sometimes not all parties are on the same page, and really it just gets a lot of discussion out there. The third step is the implementation, is to ensure all tasks within the budget are really converted into the actual business. That would be the implementation stage. And then the final stage of creating a budget is evaluation. This is where there's an assessment of whether the business resources have been used effectively, and many different items that you can look through. This is where your accountants will come into play the most to make sure financial statements are matching up to those budgets. So now I'm just going to go through each step. So let's move on to preparation. The first step is preparation. You will want to start by asking yourself a few questions to help start your budget. I have them listed here. The first one would be, what is the time frame for the budget? Again, all budgets are different. There's a wide range of different types of budgets. Again, it could be half a year, 1 year, 2 years, 3 years, as many as you would like. As well, it could be based off, it could be maybe off of just a specific grant that you got, and you need to spend the money based off of that grant, and you want to be able to provide backup for that grant. So again, you'll create a budget for that grant, and as well track it based off of that grant. The next question is, will it be on a cash or an accrual basis of accounting? We just talked about those two different types in the key terms. Again, knowing that it definitely fluctuates. It's a lot harder to budget for cash basis, just because again, it's all based off of when the money comes in and out, versus I think I can do this amount of services in a month, and certain months are going to be heavier than others. But again, cash basis, you could do all your services in December, but don't receive all your cash until January. And again, you would have to then budget it in that specific month. The third question that you would ask is, what type of budget are we creating here? Again, I was just talking about it there. Where are we doing a monthly budget, an annual, just an overall annual budget? Maybe you're just doing it by customers or by specific programs you have. You might have 4 different programs in your business, and you want to create a budget for each program, and then ultimately consolidate into a single business budget overall. And then the last question is really, what are the overall goals of this budget? Again, you can set those standards in there. Does the business want to save money for future expansion? or does the business need to cut certain programs due to projected losses of revenue or programs, or maybe even there's an additional program that's coming on that everyone needs to be aware about, and you need to create that new program budget as well. So this is where you definitely would want to start in creating your budget, just asking yourselves all these questions so then you're prepared before you get into the actual numbers. Some items that definitely help whenever you're in the preparation stage before getting into the numbers too, is the first item is definitely the one that I use the most commonly whenever I go into creating budgets, is really the prior year financial statements. I'd like to see maybe like a side-by-side comparison of the last like 2-3 years, maybe see it on a monthly basis for the prior year, because this is just a great spot to start at. It will give you trends. It will help you determine the types of sources of revenue, maybe fixed cost, variable, the one-time cost. It will help you provide averages. It'll let you see what's happening throughout the year so you can put it in correct months as well. The second item that could help you build a strong budget would be based off of the size of your business. You really want to you probably would want to involve your core managers in creating budgets for their respective programs. Again, if you work with your managers, it gives you and your managers much more visibility of yours and their expectations during the upcoming budget period. Again, creating those project budgets, then consolidating, it's a great method of creating a budget. Another item that helps businesses create budgets would be Excel spreadsheets and accounting software. I can't emphasize how much I use personally Excel in creating a budget. Again, every single tab can be a different program as well. You can set your prior year financial statements, then build the current year, and then ultimately pull it all together within there. As well, some accounting software will also help you actually create your budget and give you maybe like averages from the prior year. It also can just grab everything that you had from the prior year and just fill it all in again with what you had in the prior year. And then you can manipulate the numbers based off of what you think is going to happen. Really, it all depends on the most effective method that helps you and the business creating those budgets. Everyone has their own methods, but those will be a great starting point for you. And then the last item that I believe helps individuals and business owners in creating a budget is breaking down the budget into smaller pieces. Again, I was talking about that in number 2 again with the project budgets, but breaking it down into the different programs, it will just make it 10 times easier to budget for those specific programs instead of saying, okay, here's my annual budget. Here's these 3 programs. I'm going to spend this amount of utilities on this one, and this one, and it all adds up. It's very, very confusing, and it can be much harder. But if you can just consolidate it all from smaller pieces, it can make it much easier for you. So that's the items that I think that help me at least in creating in preparing the budget. So then the last item, the last stage really of the preparation is really starting into the numbers. There's really no particular order you have to follow to create a budget. The first item that I just normally discuss is reviewing your income sources. There's many different types of income. It all depends on your business. Remember to look at past history and also think of any additional funding sources for the upcoming budget period. Again, knowing where you're going to get additional funding sources. Maybe you have a new grant that's coming up in the next year, or a new program that you thought would help start your business or grow your business too. Knowing those income sources, it will help you then look at the expenses of the business. Another item to think about is creating a budget on a monthly basis. Remember, income and expenses can fluctuate on a monthly basis. So plugging in those revenue sources in the correct months will definitely help you whenever it comes to evaluating the budget for the next year. Again, some businesses I already touched base on it is seasonal income and can drop significantly after holidays. And then the next item that I want to talk about is determining your fixed costs. Again, we discussed this in the key terms. Again, these costs can occur daily, weekly, monthly, or even yearly. But again, knowing those easiest costs to put into a budget, and really you can just get those in there pretty simple without even knowing your income or variable or one-time costs. Again, just make sure you follow the schedules and place them into the right categories and into the right months. Again, some good examples, like I said, is rent, property taxes, insurances. You pretty much know those at the beginning of the year or whenever your annual time comes up, so you can get those in right away. Next is your variable costs. Remember, these costs change depending on revenue fluctuation. So really, you're not going to be able to do the variable costs unless you know your income sources. Some examples, again, marketing costs, office supplies, direct labor. Those are all great areas to look at. And how I normally create my variable cost is based off of the income. I normally go and look at my prior year financial statements, see what's going on. Again, normal percentages are happening there. You can see in those prior years. So if your direct labor is about 20% of your revenue, again, you'll be able to set those parameters in your budget so you're making sure you're not missing anything there.
Hey, Ray,
Yep.
Just a quick question. You work with a lot of different types of businesses. Are you able to help your customers understand what their expense ratios should be? I've had customers who run a lot of restaurants, let's say, for instance, and they'll tell you that, your ratios for your restaurant should be X% labor, X% inventory, right? X% rent, or, whatever it is. And they're good guides to figure out whether you're spending too much money or not, whether you have something to work on. If your labor is more than 20% of whatever your budget is or whatever, you're spending too much. You need to be doing something to figure out how to reduce those costs, or, that kind of stuff. Is that something that you're able to help customers with? Yeah,
definitely. And those are the types of things that, again, research online, you can see a lot of those trends as well. Great things, connections. Again, that's how the world is, having connections and talking to other restaurants and other businesses in your area too. They will know a lot of these trends as well. And just talking and getting on the same page, it's a great setting feature there. And as well, working with different types of businesses definitely gives you a lot of perspective on, okay, going in and looking at this company, I already know from my other clients and everything how to help set those variable levels and everything.
Yeah, I find benchmarks to be particularly helpful and instructive for me. You can talk to your other friends that are in the business, but if they don't know what their numbers are, they're not going to be very helpful. Right?
100%. Yep.
And there are a lot of business owners that you'd be surprised they don't really know their numbers. Some of them do, but some of them really don't. So getting those benchmarks can be really helpful. And that's where you connect in with a professional who does work for lots of different types of businesses. They bring all of that knowledge, to bear when they're talking to you. And that's really the type of relationship that you should be having, to say, how does putting my budget together help me figure out whether I'm doing the right thing or the wrong thing, and knowing what those ratios are.
Exactly. And knowing determining between those fixed and variable costs. A lot of people think, okay, this is just a fixed cost, my food supplies that I'm coming in to create all these meals and stuff. Well, those are going to stay the same. I got to buy the same food every month. But again, some months fluctuate, and knowing those different types of categories and knowing those different types of costs will help you out as well.
Yeah, or maybe if your ratio is 5%, if your food cost is 5% above where the target should be, okay, I need to take a look at this and what am I doing? Too much waste? Do I need to get better pricing? Do I need to figure out another way, another product? You know, that kind of a thing.
Exactly, and that's what budgeting does for you. And then really after variable costs are these estimate these one-time costs. Good examples of one-time costs could be maybe some equipment repairs in the near future, or maybe I need a new pizza oven. It's been many, many years and I need to buy a new one of those. Or maybe replacing inventory due to spoil and that kind of stuff. Knowing those little types of one-time costs will definitely help you over the long run as well. And again, it never hurts to have a little bit more expense in the budget, being conservative for these unexpected costs. Because again, these costs might never arise, which means then overall the business expenses will be lower by the end of the budget period. But again, you'll be able to explain why your budget is different than what actually is happening in the business. So really that's the preparation stage. Again, it's a very big stage. A lot of questions will come out through it, and you'll be able to see a lot that's going on within your business, like Mike included in there. So then again, the second step in creating a budget is really the review and the approval stage. This stage really pulls together all the budget information to present to owners or maybe board of directors, really just so everyone is on the same page. These individuals really will review the entire budget, ask questions based off your assumptions. It will spark many conversations between ownership and the managers to make sure that really what is happening is correct, or maybe the owners don't understand why you need this specific item, but the managers do. Again, this might bring many additional ideas that were not thought about during that preparation phase of the budget. Again, you'll probably want to talk to your accountants, review for accuracy as well. They review past history and future endeavors to make sure everything, and to ensure all the things make sense for future operations. And then really once all parties have the necessary time to review, ask questions, make necessary updates, they will give their final approval on the budget to move towards really the next step of creating the budget. So the next step is really the implementation stage. This is really after the approval of the budget is completed. The proper managers and individuals within the business need to be aware of their future expectations. Again, budgets can really set those tones for the next year. You think I need this and we'll be able to make this profit and everything, and just making sure everyone is understanding of that. You'll want to establish the budget with your proper management teams. Really presenting the budget will ensure that ownership and managers are on the same page. Another step of the implementation stage would be to give your accounting group the full budget, ensuring that they can get it inserted into your actual accounting software. Depending on how the budget is created, it can be entered many different ways. Again, monthly, quarterly, annually, by program, by many different types of things. If you're a nonprofit, you can break it out by programs and admin and fundraising. That's really all those different types of things there. Again, it really depends on how often you will be reviewing and evaluating the results against the budget, is how you're going to want to enter that. As well, you will review any upcoming changes to the business based on the budget. Again, any new programs that you're going to be implementing, any new grants that are going to be coming up. Again, making everyone aware of what's going to be coming in the future based off of what you think is going to happen. It just makes the business run much smoother. And really, you can review, like I said, it's just a stage that really is overlooked. Not a lot of people talk to each other and make sure that everyone's on the same page during this step. So don't want anyone caught off guard, especially whenever there's additional work coming down the line. And then the last step of creating the budget, and really it's really not part of creating the budget anymore, is the evaluation stage. Again, this is the biggest stage that, as an accountant, making sure that is happening. That's what we do. This pulls everything together and compares what you budgeted versus what is actually happening in the business. And looking at it on a monthly, a quarterly, it all depends on, again, the business itself. Everything happens on a different time frame. But again, the first thing you'll want to set up is really monthly and quarterly budget update meetings. This is where you'll review the budget versus actual financial statements that are created, and again, compare the results for the current year and future time. This will allow management to make sound decisions on spending. It will ensure that you are not overspending on categories, and we'll be able to explain what is happening during the year compared to the projected budget. Again, auditors like to see budgets versus actuals, making sure everything's running smoothly. Again, going back to your banking institutions, they will want to know all these different types of things as well. Now, during these meetings, you will also be able to assess new income and expenses, maybe modify your budget based off of new information received in the current year. Again, remember, budgets are just estimates that outline financial and operational goals for an organization. Budgets are never set in stone and can change throughout the year. Again, no one can predict the future, but again, you can get your best estimates from your past and as well what is happening currently in your business. So that's the evaluation stage. Again, I can't emphasize enough how much I would do evaluation after the fact. So
yeah, I don't know how you would assess the effectiveness of certain things that you're doing in your business unless you have a budget in place and you can see what impact your efforts are having on, as applied to your budget, right?
Exactly.
There's just no way that you can really truly assess it until you have a budget in place that's sort of your baseline, right? It's your benchmark kind of a thing to see where you're really at, and whether you want to continue to spend money on those tactical efforts that you're making, or maybe you need to pivot to something else, right?
Exactly. So I do have a fourth and final poll question. I'm going to launch it here. Again, like I said at the beginning, I'll be going in some accounting software, but I just want to see really what you're currently using for your budgeting. Maybe you're using QuickBooks Online or QuickBooks Desktop. Again, QuickBooks is a great accounting software for small businesses. But again, doesn't mean you have to be using QuickBooks. You can be using another software, or again, you just aren't even using software for your business. So just wanted to see where everyone's thoughts are. And again, I will start through QuickBooks Online, and then I will then dive maybe into a little bit of desktop, depending on the time that we have remaining. So, all right. And I will give a couple more seconds, and then I will end the poll, see what's going on. All right. So share the results, and about 43% of people are using online, 29% are desktop, and 29% really they don't know or aren't using accounting software. So
jump into that question real quick, Ray. We have a question there. Yep. Are there enough differences between QuickBooks Online and QuickBooks Desktop? I think that's a good question to answer.
Yep, I do see that question here. So really, it all depends on what you're looking at. Again, QuickBooks Online is the new and upcoming software. They are ever changing it on a monthly basis. Desktop, really, you're just buying it for the yearly time, the annual time, and then really they just want you updating every year. The one-time cost, but again, your payroll has to be updated constantly. Now, desktop, it depends on the level of desktop you're using. Again, there's many different levels of software that QuickBooks has too. Again, I'm used to using the enterprise software, but again, they have pro and they have other software as well. Again, each level has different features in them as well. QuickBooks Online, it's the exact same thing. There's four different levels at this point. They're self-employed, don't really deal with any of those, but those are just really real small businesses. But again, then there's Essentials, there is Plus, and then there's actually QuickBooks Advanced Accountant, which is very similar. So QuickBooks Advanced is very similar to the Enterprise for desktop. Pro is very simple and compares to the Essentials. Now, again, there's a lot of pros and cons to the two. Actually, I do present a little bit on that as well on other seminars, but again, QuickBooks Online is cloud-based. You don't have to worry about servers and all that kind of stuff. Desktop, you have to worry about all that stuff. If you want, again, you can access it from anywhere. QuickBooks Online, desktop, it's again on a specific server and you have to remote in and all that kind of stuff. So the differences between the two budgeting, really, it's just where you're clicking and how it's offered as well within the software. Another big difference between the two, the only difference really is in desktop, you can budget for balance sheets. On QuickBooks Online, you cannot. So that's the one biggest difference just for budgeting purposes is the difference between the two. So. All right. So like I said, we can go in some examples on to online. Let me scroll this over. So whenever you're on QuickBooks Online, whenever you're in your company, you can always go and get into a sample company. A sample company, really, you can play in it, do whatever you want in it. And ultimately, when you leave it, everything that you did goes away because you're really not messing with anything. But it's really, you can click anything and it ultimately isn't messing up any books that you currently have. So I'm in a sample company, again, Craig's Design and Landscaping Services. It's always that for the sample company online. To get into the budgeting on QuickBooks Online, you would have to hit this gear icon in the top right. And really you want to go down to the tools and down into budgeting. When opening the budgeting, this is, if you never created a budget in the system before, this is what will pop up. And we just want to create a new budget. So I'm just going to actually create a budget in the 2020 year because as a sample company, they actually do have a few transactions within 2021. So we can actually then run some reports and, you know, see some comparisons and run that. So really, again, it all starts with your name, the name of the budget, because again, every year you'll create a new budget, or maybe every grant you'll create a new budget. So that's what matters there. I'm just going to do fiscal year 2021 budget. Then again, intervals. Are you going to do it on a monthly, quarterly, annual basis? If you create it on an annual basis and you just want to look at January for the year, what they actually will do is it will divide what you put in for your annual and divide it by 12. So really, you're not going to see your fluctuations in your budget, and ultimately is going to make it flat throughout the whole year. So again, I always like to try to make it a monthly budget where I can see the fluctuations. But again, some people just want to see an annual as well. So I'm going to create the monthly in this for this example. Next, this, like I said, you can pre-fill your data into accounting software. So if you want to pull 2020 data in, again, there's no 2020 data in here, but if I pull in 2021, it will fill in everything that has happened within the 2020 fiscal year, which is great to see here. Again, it can be a little annoying to deal with pre-filled areas, because then maybe you missed that one changing it and it'll throw off your budget. So again, it's nice to have, but me personally, I normally just fill it out from scratch. So, and then the last item you have to decide is, again, are you doing it for a specific grant, a specific program, based off of classing, or you just don't want to subdivide into different customers. So I'll do it off of customers, and we can just, all you have to do is select certain customers. So we can select Coal Cars and we can select Red Rock Diner. So when you select those customers, and if you want to create a specific budget for those areas, you want to select them right here. So I want to do the budget for Red Rock Diner here. And that you can switch between the two. So what we now need to do is hit the next button. And here it's still pre-filled, and I can zero everything out if I want to. And as well, we can switch between the two budgets. So if I want to go to Red Rock and it's already filled out for me, but again, we're not going to have any design income for Red Rock. You type 0 here, and as well, this blue button right here, it'll let you copy it across the row. So it's a great feature right there. If you want to do it in the middle of the year, okay, I'm going to do 500 since June through December. Let's just do that. So that's all filled in right there for you. Other areas, you can see pre-filled data from the prior years. We made $70 for pest control, all that kind of stuff. But again, these are all different types of features that you can use in budgeting for QuickBooks Online. So whenever you're done filling this whole thing out, again, you can set it view by quarter here. There's different settings. You can hide blank rows so you don't have to look at every single row. Again, that's, and can be a lot whenever you're looking at a lot of different accounts at one time. So then we can save and close this budget. Now we have this budget created in the system. So then how does the system help you out with that budget? Again, you can go to reports here, and then you can run a budget overview. Again, a budget overview will let you see what you budgeted for this year. Again, I only booked in that $500 for revenue, and ultimately everything else is not filled out right here. But again, as well, this will be based off of your customer. So if I filled something in for Coal Cars, we'd be able to see that as well on this list. And then again, you can customize anything on these. Then the report that you will run based off your evaluation stage is the budget versus actual. Budget versus actual, this will give you what is actually happening in each customer, since I'm creating on a customer basis, and as well based off of my budget. But if I only want to see one specific customer, again, you can customize it to be a specific customer. Again, we only want Red Rock Diner. So then I can hit run report and see what actually happened throughout the year. You can run it for a range of dates. You can get rid of non-zeros. Again, and then as well, you can run it on a cash and accrual basis based off of how you normally run your financial statements. In here, again, it gives you your actual, what is happening throughout the year, what you budgeted, and it'll tell you if you're over or under budget and your percentage of your budget as well that is used up for the year. And it will go negative and or go over 100% based off of what's happening. So there's that. There you can export all of these different types of features as well, send them off to people. As well, you can save your customizations. So if I only want Red Rock and I only want that Red Rock budget versus actual, I can do Red Rock budget versus actual here. And then I can save that. And then what that will do is save this report. So whenever I go into reports and custom reports, there it is. I don't have to rerun that again. All I have to do is click this name and it's ran again for the exact same type of thing. So it's a great feature for small businesses, and this is what I normally use.
Hey, Ray, check out the question in here from Justin in the Q&A pod.
Okay.
I think that it's a pretty good one so far. I've been tracking things in a really basic way and using tax software to file. Do these accounting programs also function like tax software? Then I should just get an accounting program for both, right or not?
So most of the time, for QuickBooks, itself, there is actual apps in here and that kind of stuff that actually will import your financial statements into a tax software. But unfortunately, QuickBooks here, this is the financial side, financial statements and all that kind of stuff side to run your business. Unfortunately, then you'll need to have a tax software, if again, you can get tax software from anywhere, that you'll then need to be able to do your actual tax return. They're not one and the other, but again, this system will be able to create financial statements. So again, if you have a tax accountant doing your stuff, you can easily export these financial statements and send them off, and they'll be able to import them and not really have too many questions as well whenever it comes to doing your taxes too. But unfortunately, they don't work hand in hand. Unfortunately, you have to keep tax and financial are kind of separated here.
Okay, good. Thanks, sir.
And then really, I just was thinking about that prior question too, and what's the difference between online and desktop too for budgeting purposes. There is actually one report that on desktop has that online does not. So I'm going to pull up desktop real quick just to show you guys how the methods of how you do budgeting in desktop as well. So here, if you go to company and then planning and budgeting, again, this is where I'm in the enterprise version, but you can set up budgets, forecasts, cash flow projectors. Again, it's a little bit more robust, but online has been getting more and more features throughout the years. I started on QuickBooks Online about 5 years ago, talked to everyone, no one wanted to use it, and now pretty much everyone is switching to it. So when you go to set up a budget in QuickBooks Desktop, again, you just click the create new button up here. Again, they already have a budget created for me on desktop version. So this is a great one right here. But again, going through creating a new budget, it's kind of the same thing, your time frame. But again, right here, you can do it for profit loss or balance sheet. Again, I've never really ran a budget for a balance sheet, but again, there might be some companies out there that do. And again, it lets you do it by customer, class, just like online does. And then as well, you can create from scratch or from previous activity. And then you hit finish and it goes to the exact same screen as I was at before. So right here, this is again the same thing. You can copy across, but again, everything's just in a different spot, but really it's the exact same software, really. So then whenever you go to run reports again, you go to reports up here, then you go to budget forecast. And the biggest report here you can see is overview, budget versus actual. And then this one right here, the profit loss budget performance. Again, this is not provided online. This is one report that whenever I switched my clients over, they are like, why can't I run this? And as an accountant, I can run this in Excel and I can manipulate it, but unfortunately, it's not a click of a button like desktop. So then whenever you go to run this, the P&L budget performance, it gives you the specific month or time frame that you're running. As well, it will give you your year-to-date. It'll compare your budget, then it'll give you your year-to-date, actual year-to-date budget, and as well your annual budget. So you can compare it all in one fell swoop instead of having to do different reports for every single item. So that's a great feature in desktop that unfortunately online does not have, but it's buildable in other ways. So same thing here, Kroll cash, customized based off of customers. Nothing really too different in this example on desktop. So And I believe if there's any examples that anyone wants me to run, any other questions that they have, I mean, that is the extent of my my talking points for today's budget webinar. And I don't know if Mike or Matt have anything else to add to this.